bringing you the big story, which is US-based short seller Hindenburg has leveled fresh allegations, this time targeting India's market regulator SEBI's chairperson Madhabi Puri Buch. Now, these are some of the main points highlighted in Hindenburg's latest report. On the 5th of June 2015, Madhabi Buch and her husband opened an account with IPE Plus Fund 1 in Singapore. In March 2017, Dhaval Buch requests to be the sole operator of their fund account ahead of Madhabi Buch's appointment as SEBI's whole-time member. Now, by April 2017, Madhabi Buch is appointed as a whole-time member of SEBI. And in February 2018, an account statement from the time reveals that Buch's stake in GDOF, which is Mauritius-based fund that is linked to the Adani Group. This is post Madhabi Puri Buch becoming a whole-time member of SEBI. Now, in February 2018, Madhabi Buch redeemed units in that fund via a private email. These are the findings of Hindenburg's latest report. In March 2022, Buch transferred her 100% stake in the Singapore consulting firm Agora Partners to her husband just 2 weeks after being appointed as the chairperson of SEBI, this time around, from whole-time member to chairperson. By July 2019, Dhaval Buch is appointed as senior advisor to Blackstone, despite no prior experience in real estate or capital markets. From March 22 to present time, during Madhabi Buch's tenure as chairperson of SEBI, SEBI introduced major regulatory changes in REIT or REIT, real estate investment trusts. Now, these changes were benefiting Blackstone. In March 2023, Madhabi Buch has touted REIT as her favorite product for the future at a summit in full public view. In 2022, Agora Advisory, 99% of which is owned by Madhabi Puri Buch, generated over $260,000 in revenues. That's roughly 4.5 times her salary at SEBI. So that is a timeline of the events that are quoted according to the latest Hindenburg report. I have my colleague Kartik Malhotra with me in the studio. We also have my colleague Suyash Maheshwari joining us as well. And we have a special guest to help put things into perspective as well. We have Srinath Sridharan joining us on the broadcast. Thank you all of you for taking time to be with us. Kartik, let me begin with this. The timeline makes a case that there is a clear conflict of interest right from the beginning.
Absolutely. So I think while prima facie the ownership or the investment or the stakes that Madhabi Buch and Dhaval Buch, her husband, had in a trust which was also invested in by Vinod Adani, prior to Vinod Adani allegedly transacting through that fund to make investments back in the Adani Group, is a different matter. But in this particular instance, there does seem to be some sort of a conflict of interest, and I think that is what we should try and decode today.
Right. Suyash, quickly, in this case, you're talking about an investment advisory firm on which Madhabi Puri Buch sits, and she is a 99% stakeholder as well. But the fact of the matter is that the timeline of the transactions tell you that it was not, the things are in the gray area.
Right, Krishna. I mean, if you're talking about REITs, first, it's important to understand what a REIT actually is. So a real estate investment trust, or a REIT, is basically a special company that owns, operates, or finances real estate, products which produce income, like your shopping malls, office buildings, and apartments. So imagine if you want to invest in real estate, but you don't have the money to buy, let's say, the whole building. Buying shares in REITs, you're pooling your money with other investors, so together all of you can own a part of this big property. So Blackstone, which is a major and a significant player in India's REIT market, in fact, it sponsored India's first REIT, Embassy, back in 2019, and then Mindspace REIT, which was second biggest actually listing, and the fourth listing of a REIT in India. So Blackstone is a major player in this landscape, and Dhaval Buch, who's the husband of SEBI chairperson Madhabi Puri Buch, who, by the way, does not or did not have any prior experience in managing funds or real estate, and this is what Hindenburg is basing on his LinkedIn profile. So basically, a person who does not have any experience in managing funds or real estate has been appointed as a senior advisor back in July 2019. Now, during this, as I also mentioned, Embassy REIT also was floated after that, which, by the way, Blackstone completely sold out of it in 2023 and made a profit of about $853 million. Clearly, one could state that there could be a potential conflict of interest, especially
Right.
considering that Madhabi Puri Buch has publicly supported and promoted REIT as a promising investment, but she failed to disclose Blackstone's connection or the potential benefits to the fund her husband entices. But at the same time, I mean, I think Hindenburg should also question Blackstone unless they have a proof of a direct quid pro quo where Madhabi Puri Buch directly benefited from floating of REITs or any activity that Blackstone was involved in. Also,
Right.
remember, Dhaval was a chief procurement officer of Unilever, which is one of the largest consumer companies in the world.
Right.
So to paint him as someone who didn't know the first thing about fund is I mean, sort of ingenuous.
Okay, okay, ingenuous. Stay with us. You're talking so much about Dhaval Buch. Srinath, before I come to you, let's get a quick understanding of who exactly is Dhaval Buch. He's the husband of SEBI's chairperson, Madhabi Puri Buch, and he is a senior advisor at Blackstone and Alvarez and Marshall. He was previously head of procurement at Unilever. According to Hindenburg report, his net worth is around $10 million. Now, he has been behind the sponsoring of two REITs, the second and fourth, Mindspace REITs and Nexus Select Trust, the real estate investment trusts that came out in India. Both of them getting an approval for an IPO from SEBI during Madhabi Puri Buch's tenure at SEBI. And bear in mind, Dhaval is also originally a mechanical engineering graduate from IIT Delhi. Was a pass out from the year 1984. So, Srinath, there are two things from this report that are, finding it difficult for an explanation. One is, how is it possible that there is this connection between Madhabi Puri Buch, Dhaval Buch, and the REITs that came out in India? That's one angle. And the other angle is, of course, they're all their offshore, obscure offshore holdings, which were transferred at a particular point in time. So even if you count that out, you have the fact that Madhabi Puri Buch still sits on the board of Agora Advisors, which is possibly a stock market advisory firm.
Yeah, hi, Krishna. I mean, the first problem I think in this entire narrative is perception is the new reality. And I think forget the Twitter commentators for now or the political critics who have been active the last couple of hours for now. The entire Hindenburg focus seems to have moved away from what they stated once, saying that they're here as short sellers to take on any gaps or flaws that they find with governance and to make a statement about it, which means that they moved away from that single corporate group to actually attacking the image of the regulator and the head of the regulation at all, first of all. That's one. Two, I think if you look at this Agora advisory, and that's part of the entire Hindenburg report, I mean, I think it's a lesson for, I think, while we will need administrative reforms, more importantly is any regulatory head will not participate or should not participate in any active fund investments, as well as any corporate actions or anything that leads to corporate action. So, for example, if SEBI chief is holding a large shareholding in an entity that either transacts with market mechanisms, which is regulated by SEBI, or if it is doing any fund management or even profiting from consulting activity, I think that would be seen as not acceptable. I'm not talking about regulatory or legally, but I think from the sheer market optics of it, it's a bad optics. The third one, I think what we need to accept or understand is any individual, private individual who moves on to take a regulatory role will create a blind trust, which means that somebody will actively manage those investments. You cannot expect them to liquidate everything and lose out money, but offer it to somebody who will manage it as long as their tenure runs. And in some of the countries, they always say T plus 12 months, which means that when they leave the position for the next 12 months, also subsequently, a fund manager manages it blindly. So which means the regulator does not know what is being managed and how is it being managed. I think that's something that they missed here. I think it would be very simple if somebody has access or looks at all the board minutes of SEBI. I'm sure the regulatory head, she would have recused herself for anything that came around, let's say, definitely ICICI for starters, and if anything that has a conflict of interest. I think that is where the challenge is. You simply cannot say conflict of interest at what point, because if you look at asset management companies, mutual funds, the KMPs of mutual funds have to disclose far harshly and detailed every quarter about where they have money, not just themselves, but up to 7 levels of their families, including married sisters. So if you expect your fund manager in the industry that you regulate, then what is the disclosure that you need to make as a regulator is what I think the markets will pick up from. And I think so. The question is this: Agora. I think jury will be out, and I think any investigative journalist would pick up MCA reports and say, what is Agora actually up to? Can, let's say, SEBI or Mrs. Buch on in this matter, could she have actually formally declared when Hindenburg first attacked the corporate group? Could she have disclosed saying that there is a conflict of interest that she had? I'm not saying had. I think that would have put everything to rest. I think what was not said is what it is coming. The second part to what I think the markets are alleging about the husband and his interest with Blackstone, I think as very evidently said, I mean, definitely people who are passed out of IIT, IIM, who have been in this global system, have enough knowledge about financial markets, may not be experts in legally structuring, let's say, a REIT and others. So to say, unless you can prove direct involvement of quid pro quo, it will only be perception. But again, if you're a regulatory chief, perception is the new reality. It matters. For market optics, it matters. So my challenge, I think there, just to summarize this, is going to be, I'm glad this report came on Saturday night, not on Sunday night. Sunday night, if it had come in, Monday morning, we don't know how the retail investors would have got injured by, let's say, institutional short sellers or others who would have jumped in. Today, luckily, I think the market's being shut is a good sign.
Okay, Srinath, let's just break this up into 3 significant parts. And just for clarity of our viewers out there, there is one Global Dynamic Opportunities Fund. That is part 1 of the allegations, right? Which is the connection with the Vinod Adani investments allegedly back into Adani Group. The second part is Agora that you have detailed. And the third part is REITs. Now, forget the market optics for a minute and just look at the technicality of it. Technically, in her individual capacity, if Madhabi Puri Buch and her husband happen to have stake in the Global Dynamic Opportunity Fund, then on her appointment or around the time of the conversation around her appointment as a whole-time member on the board of SEBI, did Madhabi Puri Buch do the right thing by transferring her ownership to her husband's?
So I think, Kartik, yes, I mean, the family members, they can transfer it to their family members as long as they were not involved in actively managing the funds or giving instruction to the fund managers on the strategy.
So
and here
we don't know
like
whether...
Case, if you look at the disclosures, what 361 has also done, it looks like so seems to be the case. Let's say, I believe the family had about 1.2% stake or 1.15% stake in the entire transaction. So it is, I mean, it's unfathomable to expect a person who has 1% of skin in the game in the overall fund to know all other investors. For a minute, let's give that benefit of doubt.
Absolutely. So I think in case number 1...
But again, there is that but, Kartik, for a minute.
Okay.
The moment she took on that role and when this entire controversy broke out, the chances are she would have known that this is the same fund that she has interest in or the family has interest in. Right. And I'm hoping beyond hope on good governance and probity that she would have made those disclosures to SEBI, which is what our statement yesterday was, that all disclosures have been made, because that is exactly how perceptions are created, right? That's saying that if you knew that somebody else, and there will also be under market gossip that will go on, right, Kartik? Very simple. In a market like India, where if you're an HNI and you're investing into a marquee fund, the chances are you are going to be used as a key marketing tool by the fund, saying that so-and-so HNI is an investor.
Absolutely. So, I see your point.
By that logic, you could have, that's a point. And that is where perceptions are reality. And which is why I think that disclosures somewhere probably fell short. It is almost going back to that phrase, right? Caesar's wife has to be above suspicion.
Absolutely, you're right. So, point well taken, Srinath, but a supplementary question to that would be that, let's assume on face value right now that Madhabi Puri Buch has stated that all disclosures, necessary disclosures were made. Now, if disclosures were made, but the fact is that somebody in your family very close to you happens to still have stakes in that fund, and if that fund had indeed been used to invest back in Adani stocks by somebody else, during the investigation last year, do you think SEBI could have had more levers to pull with that particular fund and actually disclose very clearly? Because I think where the SEBI investigation fell flat against Adani last year was that there are obscure offshore funds where SEBI does not have any jurisdiction. So, could this leverage have been used better by SEBI to actually penetrate through those obscure funds and get a clear black or white yes or no response on whether or not those funds were used by Vinod Adani to make investments back in the Adani Group?
So Kartik, I think here very clearly in her personal capacity, assuming that she had the investment which she did, she could not have used it for the benefit of SEBI, the organization that she leads. She could have but made a disclosure well, in fact, and especially since it was matter, sub judice matter then, I'm sure it would have been far higher if she had said that I have this interest in this entity. It isn't a blind trust from whatever date. So I'm not aware of the functioning of that. But today, a lot of these suspicions or the questions that you've asked is probably on everybody's mind saying, what more has not been disclosed? I think that is the perception that is created. And let me just step back here. The very fact that the Indian regulatory system, she might have made disclosures to SEBI or to the board of the SEBI, or probably even the appointments committee which appointed her. But how does then, the question is, how is the government using some of these whenever controversies come on around the same topic or the same parties involved, is at all using it? And I think that is where I see this becoming political, because if you look at the political statements today, I think that the jury is split into two. One, people are calling it attack on India, anti-national stand and all that. And I think for a minute, yes, Hindenburg is a short seller. Short sellers use arbitrage, gaps, or issues like this to make profit. And I think for a minute, profit making is a good motivation to be used as market intelligence.
Absolutely.
So why would SEBI not use these as market intelligence? And they should, ideally. And the challenge in India is the regulatory heads are appointed by the government and not by a legislative committee like, let's say, a US SEC or US Fed. So each of the regulatory heads are appointed by the government, which means the opposition will wait for even the slightest perception issue and will start attacking that everything is faulty. And I think that is where we'll have to be very cautious there. And I think tomorrow, parliamentary session is going to be
So I think even if we were to, just for the sake of time, if we were to keep the politics aside for now and come back to the technicality, so Yash, I want to bring you back in. There is also this little bit of a glitch area in the timeline between 2017 and 2018. 2017 is when Madhabi Puri Buch was appointed as the whole-time member on the board of SEBI, but it's only in 2018 that she used her personal email ID and sent a mail to this Global Dynamic Opportunity Fund manager asking to liquidate her investments. So what is the confusion in that timeline, Suyash, if you can just help clear for us?
Yes, so basically back in March of 2017, right before her appointment as the whole-time director at SEBI, Dhaval Buch, who's the husband of Madhabi Puri Buch, he transferred, from a joint holding account into his, he became a sole proprietor of this investment. And, she was appointed in April of 2017. But in February of 2018, using her own Gmail account, she had written to, the wealth manager, India Infoline, and requested on behalf of Dhaval that she wanted to redeem 100% of her funds.
Right. So, Srinath, what is the big deal about that? I think, if she had jointly held stake in that investment fund, she will obviously use her private email ID. She's not going to use her SEBI official email ID to communicate back with the fund manager. And given, again, on face value that all necessary disclosures were made, is it technically not all right for an individual or a family that owns a particular stake in a fund to liquidate it whenever they feel the need to?
So liquidating, there is no problem. But if while you have taken a position, a formal position, and if you have authorized somebody else in the family to transact, then ideally it would have been better optics if she did not even give those instructions. it'll now look as if she knew something was up and that is why she redeemed. Did she know that there could be a run on the stock or whatever? I mean, these are all again perceptions. They're not. There's no data that I have. But I'm saying theoretically, it gives fodder to all the perception issues that could come. If she had said that I'm in position, so I cannot take decisions on my investments and my husband or my family will take care, it should have just stopped there, which means that any redemption notice or call would have gone from the husband or the family and not for her. And I think that again is the perception matter. It doesn't matter otherwise. If
Okay.
they've redeemed, the question now is, did they have any clue about this investment or did they redeem it for something else?
All right.
And what we are, and the only thing I think we have to be very mindful is both of them come from very checkered private sector careers, almost their entire career,
Right.
and including foreign stints. So the I think whispers that speak about how do they make money, net worth, and all that is I think utter nonsense. The reality is, if you work in a large checkered career with Unilever, with global roles, you are far more wealthier than what probably is disclosed or invested into this fund, and that's the reality of the matter. So I think we should be very respectful of drawing the line of where the controversy is and not pull in unnecessarily.
Okay. The other big supposed red flag in this report is the connection of Dhaval Buch, Madhabi's husband, to the two REITs that got introduced in India by Blackstone. You have somebody, first of all, whose appointment itself is a bit of a gray area, somebody with no prior experience in real estate or capital markets being appointed on the in Blackstone. And then consequently, you have Madhabi talking up REITs, changes being made to regulation of REITs to enable more REITs in this country. REITs started hitting the Indian market. The second one and fourth one by Blackstone.
So there again, I think Krishna, the reality is, if we say that they were the only, Blackstone were the only one who profited and nobody else was allowed, one would say it's quid pro quo. And to say that because she supported REIT, was there anything personal? Again, that's again a perception issue, difficult to prove even in a court of law. But definitely, I think one of the questions that which will stick out as a sore thumb is while the individual concerned is well qualified and has global experience, but does not have the financial, capital markets, or legal or regulatory understanding, especially in India. And if we were to be the advisor only for that particular project of REITs, that is where I think a lot of mischief could happen, gap of how they're going to, I think, defend themselves from perception. You cannot simply call it as character assassination and walk away. The point is, they have asked a pointed question saying that you did not have experience in something and you've been appointed as an expert in that. And what happened there? I think that's for the individual to jump in here, and it is going to be a sore point for anybody else.
Now, in fact, now we also understand that Blackstone, in fact, sold its entire stake in Embassy REITs, which was the first REIT in the country, and ended up increasing the second REIT in the country and the fourth one as well. So, in that
That's
sense,
right. But
even if you can't, explain quid pro quo, Blackstone certainly benefited.
See, Blackstone has been in this market. I think here I'm not for a minute defending Blackstone, but if you look at the data of Blackstone's real estate exposure globally and in India, India is one of the few markets where REITs is just picking up the last couple of years. So the reality or the nature of that investment is they're still largely invested in real estate in India. So if let's say if you had quit, if they had packed everything and sold off and said we're not going to look at any more real estate, then you would have said, okay, they knew something and regulatory changes they pushed. But here, the entire market benefited from this investments. Two, it is the Indian entities which got the benefit of Blackstone's investments originally to convert them into REIT. And of course, Blackstone got an exit. So to say that it all happened only because the individual happened to be married to the regulatory chief, I think doesn't cut eyes from that perspective. But why was somebody appointed? Then again, Krishna, the other larger narrative is in India, we have a lot of people sitting on various as independent directors on boards with no prior qualification, just that they in the position before that they sat formally in a government role or a public sector bank role would have helped, and I'm using the word help, which cannot be proven, some other promoter. So that's again, the question is, are we saying that the Indian market is so clean that anybody who helped other cannot be on the board? So I think it will fall in that category of being great.
Okay. I'm afraid we'll have to leave it at that. We're completely out of time here on the show. Srinath Sridharan, thank you so much for taking time out to be with us. And of course, my colleagues Suyash Maheshwari and Kartik Malhotra here in the studio. And with